And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, everyone. I'm going to start with a quick mic check here. Can everybody hear me? Does everybody have sound? Shoot me a quick yes or no in the chat if you could. Oh, all right. Thank you for that. Good morning, everyone. Let's get started. Welcome to the forecast. If you didn't know, I'm John. They call me JD around here. I'm going to be filling in for Hogue this week while he's taking a well-deserved week away from the grind. If you haven't seen me around before, here's a short video from earlier this year. It was part of a recap that we did. It's kind of like a short bio, but feel free to take a look at this at your convenience. I'm going to throw it in the chat here real quick. Anyway, yeah, you'll get to know me a little better just watching that. So I'm happy to be here with you today. I'd like to throw out a shout out to Hogue just for trusting me to cover for him while he's out. He's one of the best in the business, and so I hope I can really just do the job justice. And maybe we'll all walk away with some new knowledge this week. So thanks for having me. Thanks for being here. I'm looking forward to this week for sure. Well, let's get started. We've got a couple announcements. So like I said, Hogue is out until Tuesday of next week. So there will be no group coaching this week or next Monday. I'll repeat that. No group coaching this week or next Monday. We'll also be taking a break from Make Hogue Money until he returns. However, we have been sort of talking about extending the Make Hogue Money segment to 2 days a week. I'm not sure if that'll happen next week or not, but it's definitely on our radar, so stay tuned for an announcement on that also. All right, now for the economic calendar. This week, relatively light to start the week. In fact, there's really not much happening until Wednesday when MBA mortgage applications and the EIA petroleum status report come out. After that, Thursday is pretty stacked with durable goods, jobless claims, PMI, EIA, natural gas report, KC Fed manufacturing index, and balance sheet. Then we'll close out the week on Friday with the University of Michigan consumer sentiment report, which is a pretty good indicator of how strong consumer spending is. And in between all that, we have 4 Fed governors speaking and roughly 20 Treasury T-bond bill and note auctions and announcements. So that is the economic calendar for the week. All right, on to the markets for this morning. So early trade this morning, stock futures are down a little after their strongest week in about 18 months. Crude oil is trading a little stronger this morning. On the interest rate and inflation front, I picked up a quote here coming across CNBC. Officials indicate, this is from Friday actually, officials indicate an aggressive path ahead with rate rises coming at each of the remaining 6 meetings in 2022 and 3 more rate hikes in 2023. They're looking for a rate of about 2.8% by the end of 2023. Fed members also pared expectations for economic growth this year and sharply raised their outlook for inflation. Friday, PPI rose by 0.8% in February for a year-over-year increase of 10%. So basically what that's telling us is that the cost to produce the products that we as consumers purchase and use every day, like gasoline and I guess bread, are all going up. However, Jerome Powell, Fed chairman, also came out and said that he's fully committed to bringing inflation down. So I guess we'll just have to wait and see there. Last week, retail sales also grew marginally, 0.3%. So not a whole lot of confidence there. And right now, the 10-year note yield is sitting right around 2.155%. On the Ukraine-Russia front, there doesn't seem to be any sign of aggressions winding down this morning. Casualties on both sides are adding up, and the sanctions imposed on Russia are really starting to have an effect right here at home. We're seeing that in commodity markets. Volatility continues to be a problem with crude oil. Some traders are claiming that it's now untradeable. I mean, I guess the ball is really in OPEC's court now to call for a production boost just to cover Western demand and bring some stability back to the market. If that doesn't happen, we're just going to see oil prices keep moving higher. Global commodity prices are also moving higher. The price of wheat in particular has risen 60% since February. Is that unreal or what? And the nickel market is open again after the epic short squeeze and subsequent collapse. So there have been some rumors of a possible bailout happening in that market, but I haven't seen anything confirming it yet. I don't want to talk too much about it until I get some confirmation. Maybe something we can discuss on the recap later this afternoon. So with that, I'll do one of Hoag's favorite things and say good morning to everyone. Federico wins the prize this morning, first in the room. Hello, and congratulations. Taurus Trader, Tachyon, Janus, Manuel Caesar, Spencer, Zorentz, Theodora, Jimmy, Brian, Francino, Sarah Hall, Dan Trader, Dave Francis, Shaw, Bill, good morning Bill, Chilling with Dylan, Charles, Alessandro, Devant, Jake Crockett, Alfred, J, Jeff, Wadad, other brother Daryl, nice one, Expediter, Charles. All right, how's everybody doing this morning? Any questions coming in? Yes, Taurus Trader. Fed Speak today, or Fed Speak this week in general, keep an eye on. We'll be touching on quite a few things from what I understand. That's right, Spencer. All right, then. Give me just a second. I'm still working out some logistics with this chart software, where to put everything on my screens. And we'll move right into some charts for you. So, here we go. Can everybody see my screen? Give me a little shot if you can. All right. So, a few things about my chart setup. I keep it pretty simple. Right here is just a June daily contract, the E-mini S&P 500 future. I look at a daily, a 4-hour, a 30-minute, and a continuous daily. As far as moving averages go, the blue line is the 20 period, the green line is a 10 period, the black line is a VWAP, and the red line is the 50 period. I only have the 50 period on the daily charts. Also, these lines, these two black lines, would be weekly kickoff, high and low. And over here on the 30-minute, you'll see I also have a 3-day high and low. Just to keep me aware of it throughout the day. So, let's get started with the ES. So, overnight, Friday, the ES lost about 1,200 in open interest, and now the VIX is back above 25. So that's sort of that's showing a bit of weakness. There are a couple reversal patterns that I've been paying pretty close attention to the last few months, with a third one possibly setting up. You'll see right here on this daily chart this head and shoulders pattern that started back in early December. and broke out of the neckline in mid-January. I don't have the exact measured move prices right in front of me, but this measured move objective did hit fairly quickly. And then scooting right over here, we have a minor double top with the price objective on the measured move hitting fairly quickly on that trade also. Both hit their both hit their measured moves, and after that I sort of expected prices to continue lower, but after last week it would appear that the path of least resistance right now is higher for the time being. We can get a more clear picture of this on this 4-hour chart right here. So here is that head and shoulders again, and this double top, expecting continuation lower, but sort of just moving sideways ever since late February. Taking a look at the 30-minute, overnight inventory looks to be short, or at least weaker short-term longs, possibly covering positions from last week's rally. You could see Friday was just a classic trend day higher with very few pullbacks. The last time, also taking a look at this daily continuous chart, we've got momentum still pointing higher. The last time the ES traded higher 4 days in a row was back in late December. And the last time it traded 5 consecutive days higher was early November. Now with prices trading back above this 50-day moving average, I would expect to see more acceptance at higher prices in the near future. And for this morning, we're still sort of trading in Friday's value area, hovering around Friday's point of control. So possibly looking at a choppy day with the expectation of higher prices. I did get short a couple times last week. During our last Make Hogue Money session, if you were in there paying attention, I was on team short, and I continued to short for the rest of the day, and then I took Friday off after the beating I took on Thursday. So I did let my bias get the best of me there, but my eyes are opening up to acceptance at higher prices now also. So let's take a look at crude oil now. We're just a minute or so from the open. You know what? Let me put up a 1-minute chart here for you. I know Hogue was doing that. See what happens on the open here. It's already starting to climb higher. Volume really dried up in this market. As like I said, some traders are deeming it as basically untradeable right now. And Friday lost nearly 4,300 in open interest. If you caught last week's Coach's Playbook, you saw Hogue outline this little head and shoulders top right here forming. It doesn't look like the measured move hit the objective, though. I don't have that target number in front of me either, but it's now trading back above what looks like would have been the neckline of that chart pattern. You could see it a little more clearly on this 4-hour chart. So yeah, it doesn't look like it hit that target objective, and now prices just continue to grind higher. We have what almost kind of looks like a double bottom happening from late last week. Then this grind higher and slow acceptance of higher prices. Overnight inventory is definitely long. If you take a look at this 30-minute here. Pardon me. We also broke above the 3-day high overnight. It's finding some buyers around this 20-period moving average right here. So it's held there a couple of times overnight so far. Momentum is pointing slightly higher, but the lack of volume does give me a bit of concern. Maybe that'll change when the April contract comes off the board tomorrow. But we'll have to see then. So here's a daily continuation. You see volume drying up, momentum pointing slightly higher, and we're now in the open. Here we go. So we're still looking at an overnight high of 108.12. And it feels pretty strong still to start. Looking at questions, I am using a stereo microphone. Can you tell that letter opener? Does it sound grainy to you? Maybe I'll bring it in a little closer. Oh, still keeping a track on this opening range trade here. So 30 tick opening range, pretty wide. Okay, great. I see you guys. I did move my microphone around a little bit. I guess it was a little far away. I moved it in a little tighter. So gotcha. I'll do some adjustments on this, and we'll make some adjustments and hopefully be all set for the recap later today. So let's check back to this 30-minute. So still finding some support at this at these short-term moving averages. We'll come back later today. Slow start, but for now let's move on to the Nasdaq. So while the ES lost some open interest on Friday, the Nasdaq gained about 4,800 in open interest. It's also finding acceptance at higher prices, and momentum is still kind of pointing higher. Though it looks like volume's been waning a bit, possibly due to last week's equity roll. Prices closed above that 50-day moving average on Friday, and the VWAP is now also crossed above the 50. Let's change over to a daily continuous there. So here's that momentum I was looking at. Sort of lighter volume, big day, big up day, increase in open interest, and trading above the 50-day moving average. All signs of acceptance higher. Now, looking at the 4-hour chart, it would appear that the market is in the middle of a pretty healthy short squeeze. Prices just continuing to march higher. Very few pullbacks in the last couple days. We took out the early March high on Friday, and I guess the next target could be the mid-February high, which is right around weekly kickoff high. Back here you could see that. On the 30-minute, again, same scenario as the ES. Overnight inventory looks to be relatively short, or at least weaker. You can see Friday was a classic trend day. I would also expect to see acceptance of higher prices at some point in today's session, but it's still sort of hovering around in Friday's value area, and using Friday's point of control almost as I won't call it support, but buyers are coming in at Friday's point of control. All right, let's move on to, let's see what's happening in gold right now. So gold futures lost about 2,000 in open interest on Friday's break on fairly light volume also. You can see on this 4-hour, there's sort of a minor head and shoulders top with a measured move objective that is not quite hit, but the ranges look to be tightening and price has been consolidating these last few sessions. On the 30-minute, you could see overnight inventory is pretty mixed. We're still trading inside Friday's range, but the market is finding some sellers around Friday's value area low here. So the drop in open interest, the lack of volume, momentum still kind of pointing lower. This market looks poised for a chop fest coming up, and if you saw Hoag's weekly cook-off levels, he is looking for a sideways move in the market and gold market this week. Next, let's take a peek at 10-year. This has been a healthy down move since breaking the neckline of this minor there was there's a minor double top here in early March. I don't have the price objective for that measured move in front of me either, but I think it's fairly obvious that it hit. So prices have been consolidating here under the 10 and 20 period moving averages since putting in last week's low. I'll move over to the 4-hour for that. And we do look to be challenging this low, which is a note I made for this market. The 10-year gained 30,000 in open interest off of Friday's break, so I would expect to see further continuation lower after the breakout. There was a small sort of triangle forming here on the 4-hour chart, so a breakout on that, I would expect it to break out to the downside, simply based on the Fed's stance of more rate hikes coming. So onto the 30, we haven't really spent a whole lot of time outside these recent value areas until just earlier this morning, finally making a break. I really think last week's lows need to be challenged. Like I said, we're doing that right now, and with a few FOMC voting members scheduled to speak this week, I think we should be making new lows in this market in the very near future. But we are going to want to keep our eye on headlines this week. Headline risk is on to start the week until the equal calendar picks up a little bit. Until then, let me figure out this streaming once again, and I'll get back in front of you. Here we go. Alright, here we go. So, like I said, headline risk to start the week. Probably going to be a little choppy in equities until we start. Let me pull up this chart one more time. Choppy in equities, yeah, I'm still looking for acceptance at higher prices this week after last week's rally. We'll see if we can get 5 higher in a row, which hasn't happened since, like I said, I believe early November of last year. So it's something to keep on your radar. And with that, I'll turn it over for some questions. How's everybody doing this morning? I hope you got some takeaways from that. This is my first attempt at doing the morning forecast, so I hope it wasn't too horrible for you. And I'm looking forward to jumping back on here for the market recap later today. Devon asks, after an uppy week in the ES, do you expect a little mid-month correction? You know, after big up days, you always want to see a little, or you don't want to see, I always expect to see a little sideways to lower. So yeah, I'm betting it will be kind of choppy, but a choppy grind higher likely. if that makes sense to you. Take a deep breath, everybody. Yes, you did awesome. Thank you, Sarah. You're the best. Trading research. Where are you located in the U.S.? I am in the great city of Chicago. Pretty good, thanks. All right. Well, with that, we will do our hug and take our deep breath for the day. Stay grateful, happy, humble. I believe those are the lines. I'll look them up later and be more confident in that one later. Let's take a look. What is the rollover date for gold? And creative, yes, thank you. Pulling up my calendar here, but it's taking a second to load for some reason. So gold will roll on March 28th. Gold roll starts March 28th. There you go. First notice day on the 31st, and then last trading day for gold will be I don't see that on my calendar. I'll find out when the last trading day for gold is. So with that, I will leave everybody to it. We got the open coming up in about 18 minutes. So I will catch you guys later this afternoon. Have a wonderful day, and I will see you in a little bit. Thanks all.